Today we're talking about earnest money when buying a home, and we're going to be going over three key things. 1, what is earnest money? 2, what it's used for, and 3, could you get it back if the sale falls through? And we're getting started right now. Thanks for joining me today as I explain what earnest money is when buying a home in Cleveland, Ohio. I'm Christine Pappas with eXp Realty and your host for the channel. Earnest money is a good faith deposit, which shows the seller that you're a very serious buyer when putting your offer in. I'm often asked if the earnest money is in addition to the purchase price, thereby increasing the price of the home that you're paying for, or if it's the down payment itself, or if it's the closing cost or a part of the closing cost. The earnest money is not added to the purchase price. It's typically applied to the down payment of your home. However, you can choose to use it towards your closing costs or your loan fees. The purchase agreement that you sign will outline the specific of the earnest money. So let's take a look at the contract. The contract you're seeing here is a standard purchase agreement for Northeast Ohio. Some companies will have their own variations of a purchase agreement, so be sure to read through your purchase contract thoroughly. And if you have any legal questions, please seek legal counsel. The earnest money terms will specify who the earnest money will be paid to, when it's due, the amount of the earnest money, and how the earnest money can be paid. The amount of earnest money is typically between 1 to 2% of the purchase price and is usually applied to the down payment, but it can be stipulated to be credited towards the buyer's closing fees and/or loan fees. One of the biggest concerns regarding earnest money is if a buyer can get their earnest money back should the sale fall through. The contract will specify when the earnest money can be returned to the buyer, but in all cases, a mutual release must be signed. Now, in some cases, the contract already states that the seller and buyer agree to sign the mutual release with the earnest money going back to the buyer. And in other situations, the contract states the mutual release will be signed, but the difference is with instructions on disbursement of the earnest money. So that means that it could either go back to the seller or it could go back to the buyer. Now, there can be other contingencies when buying a home, but today we'll focus on 3 contingencies outlined in the contract. And we're going to start with the financing contingency. Now, the financing contingency will state that you'll have X amount of days to make your loan application and then so many days after that for your loan to actually be accepted and approved. Now, during this period of time, if for some reason, despite your good faith efforts of obtaining that loan, your loan company declines your mortgage, it is already stipulated in here that the seller and buyer will sign the mutual release and the earnest money deposit will be returned to the buyer. The next contingency is the title contingency. In this particular section, once the title company does their title search, if they find defects within that title, and the buyer and the seller cannot come to terms with how those defects will be handled, again, it is stipulated that the buyer and seller agree to sign a mutual release, releasing the earnest money back to the buyer. And then again, with the inspection contingency, it's the same thing. Should issues arise out of the inspections and a buyer and seller cannot come to terms, it is stated in here that both the buyer and the seller agree that the mutual release will be signed with the earnest money being returned to the buyer. Having the earnest money refunded back to the buyer is not always guaranteed. For instance, with other conditions, such as point of sale inspections that are required by city ordinances, often those will come back with violations. If the buyer and seller cannot agree in writing how to handle those violations, the contract can be voided, but in this situation, it states that the buyer and seller agreed to sign a mutual release, but the difference here is with the instructions on the disbursement of the earnest money. So in other words, it could be stated that the earnest money either goes back to the seller or to the buyer. So there can be some disputes over earnest money. And if there is a dispute over the earnest money, then the contract does stipulate how those disputes must be handled. So for the most part, the contract does protect the buyer with regards to their earnest money. However, if you woke up one day and said, well, that's it, I no longer want to buy the house, or you found another house down the street that you'd rather buy, and you just decided to back out, well, then you can most likely expect that the seller will receive the earnest money back. When I'm working with my buyer clients, I manage the transactional details to ensure that my clients are staying compliant with the contingencies in the contract so that they can be insured to protect their funds. Please keep in mind that when you sign a contract, it is a legally binding agreement. There can be financial consequences should you decide not to comply with the terms and conditions within that contract. And as with any legal document, if you have any legal questions, please seek legal counsel. Now that you've had a chance to watch this video, I hope you have a better understanding of what the earnest money is, what happens to the earnest money, and when the earnest money can be returned, if it can be returned. And be sure to give this video a like and subscribe to our channel because I'm putting out information that will help you buy your next home or sell your current one. Thanks again for watching, and until the next video, you have yourself a great day.